What if I focus more on defense now until I reach financial independence, and then I can focus on taking more risks then? Or do I just want to take the greater risks now? Hey everyone, welcome back to the channel. I'd appreciate it if you liked and subscribed, and you left a comment if you have any thoughts by the end of this video. But I've been thinking about how to actually prioritize investing since we have a finite amount of time here on this earth. So trying to figure out how to actually optimize that for the best long-term outcome, or even short-term outcomes in some cases. That's obviously a very important thing to do because we don't have unlimited time. And I'm trying to think about how to sort of think about investing in particular. And I want to figure out what investing is to me, given my goals, since we all have different goals as well. If your goal is to become very rich, you're going to want to figure out how investing plays a role in becoming rich. If your goal is to do something else, then investing might play a slightly different role for whatever that thing is. So within the context of my overarching goals, which is to build a pretty substantial portfolio, trying to reach financial independence to where my investment income can completely offset all of my expenses and then some, that's a goal I have. So the question is, where does investing fit into getting to that goal today? And I think of investing as much more of a defensive strategy. Investing really is defense at its core, at least when you're investing in things like real estate or publicly traded stocks that are already relatively mature. They're not gonna double, triple, or quadruple anytime soon, at least in most cases. Of course, that can happen. And when we're investing in these sorts of things, we're probably expecting something like mid to high single-digit returns, even low double-digit returns when you just park your money into a particular stock. At least over the long term, you're expecting an annualized return probably between, we'll say, 5 and 20%. And if you hit that 20% per year, that is a phenomenal return, at least when we're looking at history. The greatest investors of all time probably are closer to that 15%. Really anything over 10% historically has been quite good, but certainly over 15% has been excellent. And that's on an annualized basis. But the thing is, if you're trying to become wealthy, if you're trying to build a very substantial portfolio, investing is really more on the defensive side of building that portfolio. In that once you earn money, you're investing it, and then it has less of a chance to go to zero, but it has some chance of growing, maybe at 10% per year, whatever you think that return's gonna be. If it does that, then that's probably a pretty good investment, but we're still only talking about 10%. How do you actually get to that portfolio balance in the first place? And that's where you would want to focus more on offense, and that's actually driving new income, producing more income so that you can then put some of it towards your defensive side of actually building that portfolio, so that if something bad happens on the offensive side, you lose your job, you build a business that blows up for whatever reason in a bad way, it actually goes to zero, and you lose all that income, you still have something to fall back on, that defensive side of your whole financial picture. But you really need the offense to drive a lot of that initial gain to then throw into your actual defensive side, and then you're in a really strong position. And this isn't to say that you should wholly ignore defense while you're focusing on offense. It probably makes sense to look at it like a sort of balance or a spectrum, whereas maybe earlier on in your investing or just your general career as you're building up your net worth, probably makes less sense to focus so heavily on investing, while it makes more sense to focus on driving new income and producing more value. Maybe that's acquiring skills, maybe that's building a business or side hustle that can really drive a lot of income. Because after all, when we're comparing, say, a 10, 15, or even 20% return on an investment, that's going to be peanuts compared to a business where you invest a few $1,000s and you turn it into a $10,000 per month income or even more than that. And that's still a pretty small business, at least when we compare it to some of the other more successful examples that we have of businesses driving hundreds of thousands or even millions of dollars in revenue each month. And much of that is turning into profit, which then can be used to throw money towards the more defensive side, building your asset base while the income stream keeps throwing off more money. So for me, I've been wrestling with how I should balance this sort of focus between defense and offense. On the one hand, I do make good income through my job as an attorney, but I'm looking for more scalable opportunities at the same time that I can work on while I'm also an attorney. And being able to drive more income that way will just put us in that much more of a better financial position. And to that, I've been focusing on building more media assets, and that includes something like this YouTube channel, but also blog articles and other educational content about for now, a lot of the same topics, but I'd also be interested in looking into related or even not so related niches to try and build up my media assets that way in such a way to drive more income in a much more exponential way than if I was just putting money into a broad market index fund, for example, which might produce decent returns, but not nearly the same scalable way as if I was driving income through a business, because after all, that business has value too. So if you're building this income stream, if it's systematized in such a way, you could technically sell that business or parts of that business. So you have equity there too. You're growing that equity exponentially. Every new dollar you make on that business has a multiple assigned to it, just like a stock. If a stock makes whatever extra amount of profit, that's going to be multiplied by whatever its price to earnings ratio is, technically speaking. The same thing applies when you build a business that at least has the potential to be sold. If you're building a business that's really just your own services, that can be a little bit trickier. But in this case, I'd be building something that could technically survive without me if I build it correctly. But regardless, I'm not really looking to sell a business anytime soon. But for now, I am working on growing one so that it can have more income and more financial flexibility so that I can then start focusing a little bit more on defense as the thing grows. But like I said, it's not as though I have to disregard defense entirely. In this case, it seems like it would make some sense to allocate perhaps the majority of my free cash towards building a business, towards building up media assets, or towards whatever other business I might come up with. And meanwhile, I'd still be investing some portion of my portfolio into those more, we'll call them stable, in quotes, assets. We'll see what the future actually holds. But if I'm investing into those things that have maybe less of a chance of going to zero or completely failing than starting a business from scratch, then you have something to stand up on if things do go south with your underlying business. Because going down a more entrepreneurial path, by definition, comes with more risk. There's a bigger chance that things are going to fail because you're taking that excess risk in an effort to produce excess profits or create some sort of value. So it is sensible to set aside some sort of money on the side so that you have a fail-safe in the event that your entrepreneurial venture blows up. And again, that's blowing up in a bad way, not a good way. But an alternative way to think about something like this is what I've also been wrestling with. And that's that, what if I focus more on defense now until I reach financial independence, and then I can focus on taking more risks then? Or do I just want to take the greater risks now? In other words, why don't I just pour everything into just buying some real estate, even if it's at pretty low returns, 5 to 10% per year cash in, cash return, we'll say. Yeah, that's nice, but it's not all that great, and it's very expensive to get into real estate, so you're putting a lot of money up, and it's going to take some time. It would be a slower, but perhaps more certain route than if I was pouring money into my own business that may or may not succeed. And then once I have financial independence, I'll have time freedom, and I can do whatever I want. Maybe that's staying as an attorney, maybe it's something else. Whatever the future holds, you always want to go for the best opportunity. But all of that said, I'm still in my mid-20s, so I have some time to make up mistakes on either end, on defense or offense, though defense would theoretically be less likely to crack versus an offensive failure where I pour a bunch of money into an entrepreneurial venture that fails. But above all, I'm really viewing investing much more as defense than offense. Yes, you do get that compound effect, compound interest growth over the long term, but it really is a long-term game in many cases before you really see some substantial returns, the kind of returns that move the needle. I've talked about this quite a bit recently, this whole idea of focusing on income rather than focusing on investing while your portfolio is small. I guess if you really don't know what to do, it makes sense to just keep setting aside money because that'll give you options to go on the offense later if it really comes down to it. You could always set your money in an index fund or in a piece of real estate, and you can re-leverage that real estate, or you can take the income from those investments or simply sell those investments and then use the money later to do whatever venture you're trying to do. So I guess the bottom line is just remain financially responsible. Anyways, like, comment, subscribe, all that great stuff, and check out the affiliate links in the description below for some free stuff down there. But until next time, take care.